We're going to do a brief video on AUD USD. That's AUD USD Analysis. We've got a daily chart up here for you with 3 moving averages. The green is a 5, the red is a 20, and the blue is a 200-day moving average. Let's take a look at this daily chart for AUD USD. This is the cash forex, and not the futures but the cash. Let's take a look. It looks like we made a high about February 21 at about the 0.872 level, and we challenged the 200-day moving average just as it was beginning to roll over, and you can see we violated and went into a bear market. We came up and tested the 200-day. Just classically, these currencies trade really well for technical analysis. You can see in late October of 2021 we tested it, bounced off, and had a really good excuse me, a really good bear market decline, respecting the 200-day moving average. Excuse me. And we then went sideways as we're making our way across. They're trying to figure out what's going on with this market, and they're trying to get closer to the 200-day moving average to either bounce off of it or rally through it. You can see there was no respect for the 20-day moving average, and we're just basically in a sideways market all the way through, really all the way through almost the end of February 2022. At that time, we made our challenge to the 200-day moving average, bounced around a little bit, and then came out of this bear market and briefly put in what looked to be the beginning of a bull market here. You can see we were starting to respect, with this exception, we were starting to respect the 20-day moving average, and people started buying it like crazy. And that, of course, was the problem. This move turned into almost a parabolic move. Not a parabolic, but almost. You had a blow off top and then a resumption straight back into the bear market. And that's not unusual, especially when you're talking about a very, very popular currency to trade, the USD against the US dollar. So the net effect of that is this move showed us that we were not out of a bear market in this, irrespective of the close above the 200-day, and we went straight back below it. Ridiculously beautiful respect for the 20-day moving average. You can see it here, you can see it here, all the way down, and to a really good bear market decline. We came back up after a very sharp sell-off from 0.76 all the way down to 0.68, and we came back up and again tested the 200-day moving average, and interestingly enough respected it and bounced back down to put us firmly back down in bear market territory, all the way back down below 0.67. So when we move forward here and we see what's going on, we first see that the slope on the 200-day moving average is starting to mitigate a little bit. We're not obviously getting flat, but we're certainly not in this same slope here. We're reducing the slope of our 200-day moving average. That's telling us we're losing steam in terms of this sell-off. We have tremendous not sideways, but almost sideways action around the 0.699 level, right around here, and very heavy back and forth, good volume days, and again, good respect for the 200-day moving average, going all the way back to the beginning of the summer in June. So where are we? Well, right this second, we're in a bear market in the USD, the AUD USD currency, the Aussie dollar, and we are prices below the 5-day moving average, below the 20-day moving average, below the 200-day moving average. So we're definitely in a bear market. We're in a trading range. If you expand it out a little bit, you can see there is respect for the 20-day moving average, but it's not consistent. And this is a trader's market where you really can't use moving averages to the same kind of degree that we've discussed for the longer term moves. Currencies are great to trade short term, and this is a good one to trade. Of course, that's my opinion for entertainment purposes only, but you want to make sure that you're using a trading strategy through here as opposed to an investing strategy, in my opinion, until we see what's going to happen. Taking a longer term look here, you can see that we've got to decide what it's going to do. It's right in the middle. It's either got to come up here to about the 0.71 level, run into this 200-day moving average, close decisively above it, and by the end of October-ish be up this 0.72 level to get us firmly out of this bear market. Or I don't really see this selling off tremendously lower. However, if that's going to happen, it's due to happen, and you could, if it's going to sell off, you could make new lows in this contract below this previous low right here, which was on July 14th, which was 0.668. I would expect that to happen here in the first or second week of September if it's going to happen. Now again, we're in a bear market, so that could easily happen, but we could also go sideways a little bit and rally up, as I said, to the 200-day moving average and check that. So that's my best analysis right now. You really can't use moving averages in these sideways markets to come up with much more than that. Let's go down and take a look and see what RBAM research says about it. We follow AUD USD on our algorithmic trading systems, and let's take a look. We're right here. These come out Monday through Friday before 7 a.m. and they are both either buys or shorts. Today you can see that we've got buy prices, the same one listed all the way across, 0.68375, and that's for 1 through 20-day holding periods. Let's go and see what's going on with this price right this second. Looks like our low for the day is 0.68407. That's 68407. So we have not touched it yet. So we're a little bit lower than that, and it's all the way across. The way these work, you buy them in the column that you select. So it would be 1, 2, 5, 10, and 20-day hold. So if you wanted to hold for 1 day and it hit this price, assuming your own research said it was a good idea, you can't use these anything other than for anything other than entertainment. But if your own analysis said this was a good area, you would get in and hold for 1 day max on this column. In this particular example, all the prices are the same, and you can see in other rows the prices are different. But today, for this particular example, they're all the same. So 1 through 20-day hold would have the same day price, and you'd 1 day hold, you get in, get out by the end of the next trading day at a loss, or take your profits sooner. If you got it, you take your profits as fast as you can get them here, or as soon as you can get them, assuming there is a profit. Otherwise, you close it out at a loss at the end of 1, 2, 5, 10, and 20-day holding periods. That's the way this works. Take your profits as soon as you get them, or close out, worst case, at the end of your holding periods at a loss. You can get these all at rbamresearch.com before 7 a.m. Monday through Friday. Absolutely no cost, no credit card required. We cover the major stocks, 190 plus stocks, the major forex pairs, BTC for crypto, and the major most liquid futures contracts. You can get them again, rbamresearch.com. There's a link in the description below. You just go there and sign up to get them. If you like this video, please click the like button. If you want to subscribe, please do that. If you want to leave us a nice comment about how to improve these videos, we'd love to hear from you in the comment section below. And keep in mind, everything you've seen or heard on here is opinion only, all for entertainment purposes only, and you definitely trade at your own risk.